Hey traders, happy Monday. Welcome to the Weekly Outlook. This is Chris Pulver here talking about stocks, Forex, cryptos, everything financial market related. It is Monday, the 10th of February. This is the week of February 10th through the 14th, leading up to a Valentine's Day. And will the market be our Valentine's this week? We'll find out. Let's take a look at the economic calendar. Let's see what's cooking. Last week, the stock market was still on a rip. We had a really nice recovery weekend as expected. If you watched my video last week on the 3rd, I expected a bit of a retracement, and the market did everything and then some. We had new highs once again on the Dow Jones, S&P 500, and NASDAQ. We had some really aggressive bullish moves and gaps. I have an interesting chart to discuss that. So last week, the Dow Jones was up 2.98%, just shy of 3% on the week. The S&P 500 eclipsed the 3% mark at 3.16%, and the NASDAQ up 4%. So tech's leading the way. We had a 3.6% correction on most of the U.S. markets, so that seems a little mild to be buying the dip, but it looks like there was a bit of a short squeeze going on. There's still a ton of divergence. We'll take a look at the charts and let the technicals do the talking. Bitcoin had another nice run along with other cryptos. We had Bitcoin up to around $9,700. It's currently trading around $98, about a 4% gain on the week. We had Ethereum and Litecoin, a lot of yearly pivots that we talked about early in the year. A lot of those yearly pivots are getting hit, so that's a great sign if they're closing higher. I continue to be bullish on cryptocurrencies and the 10-year Treasury notes. A lot of the 20 and the 30 and the 10-year notes watching very carefully. The 10-year notes sitting around 1.58%, and the Fed will have some news this week as Jerome Powell will be testifying in front of the, I believe, the House committees. Let me double check that on the calendar here. Give me 1 second. We have Forex Factory. We have Fed Chair Powell testifies. The semi-annual monetary policy report before the House Financial Services Committee. I believe that is a 2-day testimony. Yep, so Tuesday and Wednesday with Powell. What I think will be interesting from the language that comes out of this is if there's anything that the Fed will do to reassure the markets that it is also looking for not just labor news, which we had non-farm payroll last Friday, but labor news and inflation levels, and also globally to make sure that things are going to stay as is with everything with the scare from the coronavirus and China injecting liquidity back into the markets. I think the U.S. and the Fed is going to do the exact same thing. So there continues to be an abundance of money and circulation in the world to keep things going and keep risk appetite. Right now, there's really no better place to park that than in stocks. So everyone that did miss out last year is still getting a piece of that pie to get these markets pushing up the new highs during an election year. I know that a correction seems inevitable. I know that it seems like any time, but the market shrugged off coronavirus last week, which continues to mount up additional cases and deaths. And all that is terrible news. But we've again seen the market's resiliency and its ability to keep plugging away and keep grinding out higher highs. So it is complex. It is weird. It is odd. Some of the correlations that we're used to seeing historically are not playing out the same way that they have in years past. But it is what it is. We have to trade the charts. We have to trade what is in the present. We have to take advantage of what the market is giving us. And that's what we're here to do every single week. So this week, we kick things off with a light Monday. Really, the markets overall are not too active this morning. Here's actually the dashboard. Let me go to marketwatch.com. Dashboard, so futures is fairly flat for the morning, just hanging on to some slight gains. NASDAQ had a nice jump. U.S. markets as well, just clinging to some small gains for the day thus far. We start off with a light Monday. News-wise, we go into Tuesday with GDP numbers out of the pound. ECB President Lagarde speaking on Tuesday, delivering opening remarks of the presentation for the ECB annual report. Okay. And then day 1 of 2 for Powell on Wednesday on Capitol Hill. Bank of England Governor Carney speaking. This will be a bit of a mover for the week. I'll be paying attention closely to the New Zealand dollars. So remember to keep that in mind when we're talking about some pairs this week in the Forex market. Cash rate decision at 8 p.m. Eastern time, and then a press conference at 9 p.m. You can see here that they're expected to keep the rates unchanged at 1%. We have seen, a couple of things. This goes back to last summer when the RBNZ was holding rates at 1%. The forecast was 25 basis points as a cut. They ended up cutting 0.5% down to 1%. And then the forecast came in with another 25 basis points cut, and they kept it the same at 1%. So it just so happened that, technically I was looking for the Kiwi to get weaker, and they cut rates dramatically by that 0.5%. And then we're looking for the Kiwi to get stronger, and they kept the rates unchanged at 1%. So a significant amount of movement has really been played out by how the RBNZ has been changing rates, or cutting rates or lack of cutting rates. So I'm really interested to see how it lines up for this month in February. Although a lot of the major cuts and decisions that I've seen with the RBNZ, a lot of the big movers have been pretty seasonal. So we've seen late March, early April movement on the Kiwi, August, September breakouts. I mean, a lot of it's been kind of trend season oriented. So I would suspect that there's going to be some nice volatility on the Kiwis for this week. One in particular I'm watching is the Aussie New Zealand to see if it jumps up towards 104.90, which is a yearly pivot, or if we see a weaker move on the New Zealand dollar this week that lasts, allowing the Aussie New Zealand to get up to levels at 107, 107.50. Or if it's strong enough move that pushes it right back down to the lows around 103. So we'll take a look at that one as a couple of opportunities we'll set up on the basket for the New Zealand dollar. Powell again on Wednesday. Governor Orr speaking from New Zealand. Governor Lowe speaking from Australia. Governor Pulver speaking from Canada. So a lot of speech this week, a lot of talk. See how that translates into price action. Dollar CPI news on Thursday morning and retail sales on Friday. So last week's numbers, just to put this in perspective, we had some non-farm payroll numbers, which I kind of interpreted. So I ran a live session around this. We had a miss in average earnings. So again, we're showing 0.1% miss on the average earnings for, again, steady jobs, right? We're seeing steady jobs, 150K, 200,000 jobs, but people are making less money. And this time the unemployment rate actually went up by 0.1%. That hasn't derailed the dollar. The dollar is still receiving a lot of love. The dollar is still stubborn. We've had now, I think, 6 days in a row that's going to be bullish on the dollar. CAD news came out positive as well, but CAD is also very susceptible to oil volatility. And if there's weakness in oil, that will drag the CAD with it. So as we get into the charts, here actually is the dollar index. And as I mentioned, we have 1, 2, 3, 4, 5. Today's candle makes 6 days in a row that are bullish on the dollar index. Now, why am I watching this? Because we are also looking at the backside of this channel, which should be somewhere around equal highs back in August and September of last year. If you're going to put a price to that, it's around 12,450 to 12,500. So if you want to write that down, 12,450 to 12,500 on the US dollar index. Okay, we're looking for the backside of this trend line, equal highs. What I'm looking for specifically from the technicals is prices clearly just kind of hanging out here in the overbought zone. The higher this thing goes, the more I want to see, obvious disagreement on this, daily chart with a momentum oscillator. So if we have, a stochastic or an oscillator that's overbought with disagreement on momentum, I would think that the next move would be something bearish. And that's what we've been forecasting and waiting for. It's just a matter of what is going to actually turn the dollar. All right, but for right now, it's 6 days in a row. I did take a trade last week on Friday around 33.13 on the US dollar, Canadian dollar. That happens to be up a little bit higher. I'm upside down like 10 pips on that one for right now, but I'm watching that pair closely. Let's get into some other instruments. So Bitcoin, like I said, up to $9,700, $9,800. Last week's high actually crossed the $10,000 mark. So good for the bulls to eye that level and hit it. If we have a pullback, there's still a lot of nice trendline support right in here. So we have our U-turn. I'm trying to establish some type of channel, which I showed last week in the weekly outlook and talked about in my trading room. A bit of a pitchfork look where we had this low to high. You space this out over a pitchfork tool, and we're projecting a larger bullish trend where, again, we're eyeing levels up at 13,700 or higher. So we're going to see how this trend continues, but if there's any pullbacks, I'm looking for bulls to continue in some trend fashion there. If we get a little bit more aggressive, then we're looking to take out these highs around 13,700, and we'll see if we come up to some type of midpoint on this pitchfork tool. So you can actually do that with any charting software, but I have one right here. There's a nice pitchfork tool. Start from this low to high and space it out just like so. Find those lows from last year, and that would be your trajectory. So we're looking for some continuation in a bullish channel to the upside and looking to buy dips and stay supportive on Bitcoin as well as others. So that is Bitcoin. We had a nice run on Ethereum to the upside. I had a lot of great chart alarms going off last week. There's the yearly pivot at $72. We have crossed it. We're currently trading just shy of 77. I love the fact that we also closed bullish with the candle above that yearly pivot. If we take a look, that's Litecoin. Let's look at Ethereum. Ethereum, 195 was the yearly pivot. We closed well above that, 195, and we're trading at 228 with a very strong weekly candle Litecoin, Ethereum, Ripple. Let's go to Ripple. I believe we hit 29 cents last week on Ripple. We are just shy of that 29-cent mark. You can see a little bit of a stall, but a nice run from 22 all the way up towards 28. Again, any type of pullback would be great to see a pullback, high or low, and then more volume and more trend to the upside. You can connect the lows as well. Look for some bullishness out of these cryptos to continue. So a little pullback. Let's see where that buying interest lies. Previous resistance becomes future support right in that zone around 26 to 25 cents. So good week on cryptos, risk on in the stock market. If we take a look at the SPY really quickly, you'll notice some very strong gaps to the upside. And once again, the determination of the markets to shrug off bad news and just keep piling on some bullish days. So this is concerning, especially seeing that we had these strong gaps to the upside. If there's a lack of volume to that move, then I have a feeling this could be a short squeeze. And what that means is that we have a trend line break here. It looks like the bears are in control with a bit of a break in that 3.5 to 3.6% correction and a squeeze to the upside just to run any type of stops. Now, in the stock market, it's different, as usually not everybody's trading on margin to short the market. But the reality is, if there's volume coming back in and this makes a higher low, higher high, then it is the support of the central banks. It is the market's ability just to shrug off a lot of bad news. It is money and flows being parked into stocks as opposed to the risk off and safe haven assets like bonds. So we will see what this week holds with these strong gaps to the upside. We might have a bit more of a kind of a fake out type week or an indecision week where we have highs from here. We just tagged those highs last week. We have this low. We might deal with some choppiness moving forward where the market kind of oscillates for a little bit. There might be some coronavirus cases that pop back up. It might make headline news this week, which would certainly send the market down a little bit. And that could be all it needs from a risk-off standpoint to fill some of these gaps from last week from a technical standpoint. So unless Powell says something on behalf of the Fed very uplifting to kind of keep the market's interest and keep the market's understanding that the central banks truly have the market's support and I would say best interest at heart, we might have a type of indecision week where we have the market struggles to make new highs. We have a lot of earnings this week. We have Beyond Meat, new IPO, relatively new IPO. Beyond Meat's got another earnings report. Unilever, Hilton, Hasbro, Under Armour, Cisco, CVS, Shopify. Alibaba's got an earnings report on Thursday. So we have a healthy earnings week with, again, if coronavirus is fairly muted news-wise, then earnings will be maybe the tell to see if the market wants to lift higher. I think if anything explicitly comes out of Powell to make it seem like the Fed might cut rates or be hinting at more easing or more stimulus, then expect that to be good news for the market to take and continue to find a way to go higher. Again, it's a matter of time before we have a significant correction. I see a lot of analysts and experts calling for something around the 10% mark. How it gets there, how fast it happens, we don't know yet. Maybe it's going to push a little bit higher before it happens. This might be the sell and may go away type thing where we might see this market just continue to drift until end of April, early or mid-May, and then we drop as we head into summer months. So we don't know. Again, it's not our job to time it. It's our job to stay in the here and now and trade and be prepared. So getting into currency pairs, the Aussie had quite a volatile week last week. We had a great start to the week. I did bank some profits on the Aussie CAD. I banked some profits on the CAD Swiss. The Aussie really just got reset, unfortunately, by the end of the week. We had a start to the week here. So this was Friday, Thursday, Wednesday, Tuesday, Monday. So you can see that we had a nice promising push to the week. I did take some short-term profits on the Aussie CAD, and it was reset. So I got back in. I'm still back in the Aussie CAD. I'm still participating. We have a nice profit level around 9020. We have a nice yearly pivot at 9180. I'm continuing to look to buy off these lows and stay with this support and see if I can get this to range trade up to 9,000 again or 9,100 again. The Aussie Swiss had a nice start to the week, but again, reset. We're watching this trend line and looking for a nice, clean trend line break. So ideally, we start making our way onto the right-hand side of the trend line, allowing price to have some bullish momentum on confirmation to trade it back up towards these highs. That's around 6,800. Outer trend line around the same area, 6,800. Watching these lows around 6,450 or so. I'm staying the course. I'm still holding long on Aussie Swiss. If it gets on the right-hand side of the trend line, I'll look to buy at equal lows or some divergent lows, but I'm going to continue to hold long on Aussie Swiss. Aussie Yen, we had some scalps not last week, but the week before. We had some scalps last week filling a gap. You can see this pretty easily on the 1-hour chart. So right in here was a price gap. We had our push down from the coronavirus scare, and then coming into last week, I thought, you know what, it's probably going to be a retracement week. And we retraced nicely all the way back up to fill that gap, and then ended the week on a sour note. And we're trying to figure out now whether there's going to be some footing in the Aussie for this to be the low and kind of hang out with some price in here and see if we can come back and recover further. That would require stocks to rally higher. That would require Japanese yen weakness. If we still have risk off, then we're probably going to come back down and retest the lows. Again, that will be an important level. Are we going to bounce and oscillate off of this support and resistance? Or are we going to establish some intermediate range-bound trading until the market makes a bigger decision? One key currency pair that I'm watching on yen pairs, said this last couple of weeks, dollar-yen. If the dollar-yen cannot break above 110, if the dollar-yen cannot break below 108, it is a big indecision area. So a break bullish above 110, I'm looking to stay long to 112 and all the way up to 114. A break below 108 brings us down into 105 and possibly even 100, depending on how ugly things actually get. So I think with this oscillation and indecision on the dollar-yen, that will keep a lot of other yen pairs at bay and possibly difficult to trade unless you're looking at short-term opportunities and scalping. Aussie New Zealand, this one is definitely on the radar this week. We have a nice structured break to the upside. For now, we have our rate decision on, is it Wednesday night? Wednesday, let's see, that's last week, that's this week. This week is, Tuesday night. Tuesday night, 8 p.m. Eastern Time, official cash rate decision for the RBNZ. Let's see what happens. So I'm looking at this a couple different ways. One is that this RBNZ just, allows this to have enough volume and push this thing very quickly all the way up to 107, 107.50. If it's a no change like the rates expected to be on the news, then this might push right back down into lows once again. Watch the lows, watch the lows, watch the lows. I'm still going to buy it off these lows around 103 and see if we can still maintain this posture move to the upside and still get to 107. So if we start going aggressively north, I'm going to look to add to my current positions that I've been leveling myself into over here and trying to add to those positions to get to 107 or higher. If we have a reset and ends up coming back down, then I'll be watching these lows to buy at equal lows around 10300. And I'll still stay the course and build myself through a position getting back to 107. So we'll see if the RBNZ comes out with any surprises this week. Most likely not. We've seen the Fed hold rates the same, the Bank of Canada hold rates the same, the RBA, Reserve Bank of Australia, hold rates the same. So I think that the OCR for the RBNZ will likely stay the course at 1%. We'll see how price action affects the New Zealand dollar. And like I said, I'll be watching the Aussie New Zealand very closely. From there, we'll go Aussie dollar. Again, good start to last week, and then a reset button was hit. Aussie dollar is back down towards these lows from August of last year, September of last year, into these lows once again. One thing I'm watching extremely carefully on the higher time frame is, are we going to put in a bottom? 1, 2, 3, 4, 5, 6 candles. Come on. We got a nice series of bearish candles in a row consecutively. That is very unusual to see more than probably 7 to 8 candles in a row. So we're, in my opinion, I think from just a timing standpoint, we're getting to a level where there probably won't be too much more to the downside without some indecision or a bit of a correction. I'm hoping for a much bigger correction to see if the dollar actually starts to fall and therefore the Aussie dollar starts to recover. So I have these levels in. These blue lines represent some buy trades that I have that are nice and small. Anything that can give us something on the right side of this trend line, which is what I'm watching carefully, is can we break this trend line? Can we make a move to the upside? And can we get a decent recovery back to around 68.50? There's a nice harmonic level that I've got my eye set on at 68.37, and also a nice round number target at 7,000 like we had last holiday season in December. So a lot of it is just let's break the trend line. And that brings me to a nice quick plug for my Keep It Seriously Simple videos right here. You can see this video series on YouTube. Check it out. It's Keep It Seriously Simple. I'm just offering up some of my best principles and elements and fundamentals in trading, which is just using structure, price action, price pattern, structure, support, resistance, trend lines. This week's module is going to be all about trend lines. I'll have that video coming soon, so you can subscribe to my channel, leave a like, leave me some feedback, but get that video and check it out this week. Aussie dollar looking for a trend line to break. CAD Swiss took some short-term profits on this one last week. I'm looking to do the same again and just reload the position. So we have this big range support level between 7,300 and 7,000, I have pending orders in this box at the zeros. So I'm buying it at 73, I'm buying it at 72, I'm buying it at 71, I'm going to buy it at 7,000. And my plan is to buy it nice and low and then offload those positions for some profit chunks around 7,600. So I'm trying to buy low and then take some profit up at resistance. If we are watching this level, let's see what happens in here. If we, form some bottoming patterns, maybe we form lows around 7,300 and then we go back up to 76. So I'm trying to start participating in the buy trades now, but I'm keeping the trade size nice and small so I can level myself into it or work my way through it, take this area to buy low, and then offset those positions and take some profit around 75.50 to 7,600. That is CAD Swiss, CAD Yen. Yen pairs I'm not really that excited about this week. I think we're going to have more of an indecision week depending on what the dollar yen does and, of course, the stock market. So I'll probably steer clear and try to let this evolve through the week with the trading room. Swiss yen, again, safe haven versus safe haven. Not much to do on this one other than wait. We'll see what happens on the right side of this trend line. Otherwise, we'll stay out of this one and let it come up to a much better price like 118 to sell it. Euro Aussie, still holding firm on my 63.50. We were up about 80 pips of profit last week. Had that reset a bit towards 6,400. We're currently trading back down at break even or better. Hopefully this is going to work its way down to 6,000. We can start taking some profits on the Euro Aussie. If we can start taking profits on Euro Aussie, then I would suspect our Aussie Swiss goes to the upside to pay out as well. Euro CAD continues to be very indecisive. We have now in the daily chart 1, 2, 3, 4, 5 days in a row that are bearish. We did take some short-term profits. We bought it nice and low. Offloaded those positions around 46.50 to 4,700 for some short-term profit. Now I'm looking to see, do we get filled again? If we can just get filled at these lows again, I might buy it and just trade this range from around 44.50 to 46.50. We'll see if this level holds and we can just keep buying low and selling high and buying low. But I'd prefer, because we have a yearly pivot at 48.70 and ranges at 4,700, I want to just buy it around 45 or 44.50 and try to take some profits around 47. So I'm looking for some range opportunities there. Euro Swiss. This one is being a bit of a thorn in my side, but it will be a nice payout when it's all time to turn. It's just not ready yet. We finally broke this trend line. This is another really good looking setup as far as the technicals go. I like how we're sitting, with lows in price or equal lows in price right in here, but strong disagreement on the daily chart. We filled the French election gap from 2017. This stochastic is not exactly where I want to see it, but from a weekly chart, let's take a look at this on a weekly chart. Okay, weekly chart, you can see again, this one is at the oversold zone. And again, from this low in price to these lows in price, you can see, again, disagreement on momentum. So multiple bearish candles in a row. I'm looking for some type of bottom to be kicking in sooner than later. I'm just going to watch and see how it behaves on the right-hand side of this trend line. So again, good timing to check out and release that module for trend lines this week in my Keep It Seriously Simple video series. But I want to see what happens on the right side of this trend line, because if we end up showing indecision, that's great. If we show some bullishness, that's even better. But if we start packing some bullish trades on this, then I'm looking for this to get back to 110, 110.50. There's a yearly pivot at 110.50 that I would be super excited about taking some profits at. So I will continue to hold. I've been, buying low over here, had some profits, didn't really take much off the table, added again lower. So I'm just kind of hanging on to a group position. I want to spend some time on the right-hand side of the trend line and see this thing make a nice recovery towards 110.50 or higher. So I'm going to just really be patient, bide my time on the Euro Swiss. Euro Pound, not much to do on this one. Low volatility, hasn't really done much of anything. We're sitting at a trade around around 84.70, 84.75, just below break even, but we're going to give this one some time to play out. Euro Yen. Be careful on those yen pairs this week. The euro is definitely on the weaker side. Here's the currency strength chart for the day. So we have our New Zealand dollar and our euro on the weaker points. We have our CAD, our Swiss, our dollar, our yen baseline. Our Aussie had a nice start to the Sunday-Monday trading session and has since given it back a little bit. So at least it's nice to show there's some demand in the Aussie. I certainly hope that sticks around, because technically there's a great alignment on the Aussie basket to show some strength. And furthermore, I'd like to see some Swiss alignments to the downside. If we can see some weaker Swiss franc movement, that would be fantastic from a basket standpoint, because the bigger technicals, bigger time frames are at least showing me signs for those movements. Euro New Zealand, this one's range bound. We might end up coming back up to range highs around 74 to possibly 7,500. I think this is just a big range. So this could be indecisive in this area. We might come up to these highs. I'm interested in selling it there. If it comes down to these lows, I'm interested in buying it. Keep in mind, we do have that RBNZ rate decision this week, so we should see some decent volatility to go somewhere else. You know, have it be weaker New Zealand dollar and move this thing to the upside, have it be a stronger New Zealand dollar, move this to the downside, but hopefully a pair like Euro New Zealand, Pound New Zealand, and other pairs can see a decent move that we can take advantage of and grab some pips this week. So there's plenty of opportunity here, provided we go somewhere. So we have to the downside about 360 pips, to the upside about 460 pips. So I would be able to play this bullish or bearish, just depending on what the news and what type of catalyst creates a movement this week on the Euro New Zealand. Euro dollar. I know a lot of traders have been short since 110. Once we officially broke that 110 seal, which we did, we closed below those lows and we are steadily lower. So we pushed about 90 pips to the downside, not fast and furious, but lows around 109.10, 109.11, currently trading off those lows. Again, look at the candlesticks. 1, 2, 3, 4, 5, 6 candles in a row. I'm looking at levels like 109, looking at levels like 108. 10800 is a really important level that will officially fill the 2017 French election gap. So I would like, and again, if you're short from 110 and you're up 80, 90 pips, move your stop loss to break even, put in a trailing stop and let this thing run. It can continue to drift towards 108, come down a little bit lower, and then we play the range. We can buy this nice and low between 108 and 10700 and most likely see a beautiful range trade. This could just go straight down to these range lows and bounce right back up to range highs. And that's probably a 100 to 200 pip channel that we can trade. But if you've been short since 110 or short since 112, you're loving this direction, loving this stronger move to the downside as the dollar continues to show its resiliency. Pound pairs. I'm just kind of patiently waiting the pound pairs to see if we break this trend line, see if the Aussie gets some sustained strength. If it does, I like Aussie strength. I like pound Aussie to the downside on the right side of this trend line. We will find out. But I think give this one some time for right now. There's not a lot of volatility on this one. I'm watching, this high and this high. There might be a reversal pattern setting up here. We might have this high in price. We might have this high in price. We might have one more high in price, but if that shows a strong case for disagreement, that's most likely going to be a run that comes all the way back down into these levels, into these October levels from 2019. So I will keep a close eye on some of these reversal patterns if the pound Aussie does happen to strike one more point for those bulls. Otherwise, I'll just see what happens on the right side of the trend line. If we end up staying sideways, look for a trend line break and trade it down as well. But I'm looking to see one more time, do we make a high and show strong divergence? If so, that's probably a great looking sell trade as well. So again, not a lot of volatility on pound pairs for this time, so being patient on pound Aussie. Pound Canadian dollar, being patient, watching the right side of this blue trend line. If we break it, I'm looking to sell it. Pound Swiss. This one, really stronger pound, stronger Swiss, or weaker pound, weaker Swiss. We've had a lot of indecision on this one. It might drift a smidge lower. I could see this drifting a little bit lower into 2,300, 2,200. From there, let's look for a nice clean trendline break or some type of channel that will ultimately break and give us a run back to the upside. I'm looking at this as kind of level 1 to buy, and these lows around 1,700, level 2 to buy. So I am still favoring a buy trade on the pound Swiss. I just want to see it set up at better levels for us. Pound yen, same thing. Stronger pound, stronger yen. A lot of indecision. Weaker pound, weaker yen. A lot of indecision. So we haven't quite broken any major lows. I'm going to go ahead and take a line here. Horizontal line. And let's make this blue. And the daily chart needs to close below this. If we can close below this, I'm much more convinced we have some more downside coming. Easy levels, if we break and close bearish, we'd go after this point for the bears right there. So pip-wise, that should be a few hundred pips up for grabs. If we close below there, we're looking at around 200 to 250 pips to the downside. There's certainly a lot more space to go if we have any momentum here. I'm looking at levels all the way back into October of 2019. That's about 850 pips. So no shortage of opportunity if we get the confirmation. That's what we're waiting for, is just see if we can confirm that break below that horizontal blue line, which puts us around 141, price-wise around 141, 141.00. Pound New Zealand, waiting We have a ton of resistance at 2.04, 2.0450. We haven't broken this trend line yet either. I do want to see what happens at these highs. Again, with the news this week, perhaps the news spikes up to these highs, indecision at the top, and then comes all the way back down. We don't know yet. The hard part about something like the pound New Zealand with a news announcement like the RBNZ is that we could have, literally in 1 minute, you could have a 200 to 300 pip candle. So that can be increasingly difficult to trade during the time. Now, granted, it's not 5 p.m. I mean, in years past, the RBNZ would have the rate decision at 4 p.m., 5 p.m. Eastern time, making it extremely difficult to trade. Now, at least it's at 8 p.m., which is during the Asia session. But again, it's a low volume, low liquidity type session with those news events. So just be careful on that, trying to scalp it or trade it with high spreads or big price gaps and things like that. So watch the resistance point. That's all I'm saying. If it comes back up to 2.04 or 2.05, if it does it very quickly, we're probably going to be able to fade that move back down. If it drops immediately, then we're looking for confirmation on the right side of this trend line to fall back down into previous lows around 1.95. So again, looking for movement this week on the Kiwi, see if it can be delivered on the rate decision. Let's see, that was pound New Zealand, pound US dollar. Just a nice steady break to the downside from 29.50. It's currently trading at 29.16. It's not as fast as the euro. In fact, that's surprising that the euro dollar has been moving faster with at least more of an effort to the downside than the pound dollar. However, we're still below 3,000, which I remain a bearish posture below 3,000. 29.50 was our close below, and you can see that we are drifting lower. So close below, trade it, favor selling it for right now. We should be scoring points down here towards 2,800 to 2,750 on the pound dollar. New Zealand CAD. We'll find out more this week. Watching the news, of course, on Tuesday. If it's a stronger Kiwi, we're heading back up towards 89 to 9,000. If it's a weaker move in the Kiwi, we're heading back down to these lows where I'll look to probably jump on for some smaller positions and fade that move back up. So again, I'm watching this one for news and figure out how I trade Tuesday to Wednesday in this week. So we'll talk about that in the trading room. New Zealand Swiss, same thing. We came through our pivot levels. This was kind of level 1 that I entered in on right here. So level 1 I'm in. Level 2 is pending down here, not quite filled yet. I'll wait and see what happens. If it's a stronger move in the Kiwi, we're coming back up. We'll look for a trend line break as well to get this one back up into 6,500 or higher. If it comes back into lows, I'm looking for disagreement between price and momentum. We'll see how this lines up from the technical standpoint. But the Swiss has been really strange to see this much resiliency in the Swiss franc and this kind of period of stronger trends and risk off, although the yen is weaker. It's really strange to see the Swiss act like this. But again, it's a basket and a currency pair that's known for intervention. And based on the Euro Swiss and the Dollar Swiss and things like that, I think it all will work out technically, but it's definitely taking its sweet time for now. So still waiting to buy low on the New Zealand Swiss and try to get some good entries to play back up towards 65 or higher. If you look at this from a higher time frame, it's really just a big channel. Lots of resistance up here, then support, resistance, support, back and forth we go. We might come down and tap these lows around 6,100, 6,150, and then run right back up the channel highs around 65. So I think the structure is still pretty solid on that one to trade the range. New Zealand yen. New Zealand yen, I'm going to stay out of yen pairs mostly for this week. We have some trend line support, but again, the yens can be a bit on the tricky side, so I would stay out of New Zealand yen this week unless there's scalping opportunity. If you want to scalp it, look for the 30-minute alignments or 15-minute alignments to scalp and trade the right side of this trend line. But just watch for some indecision, especially if that dollar is going to be also kind of range bound. New Zealand dollar. We are coming back into that neckline area. This is a previous head and shoulders that was bullish that played out during December. It's come back and it's reset to that December 2nd breakout. I'm still looking at a potential head and shoulders this way. Left shoulder, head to neckline, trying to set up a right shoulder. Now, again, we need to break this trend line, this blue line that I have on my chart. If we break that on the right-hand side, this should be giving us a buy trade. But we are favoring some bearishness right now in the short term. I'm looking to see if there's a U-turn this week on the news. Maybe Powell creates a U-turn as well. If we come back into these lows around 6,200, depending on how it gets there, I would see if these lows hold and this price ends up coming back up and we have more range-bound trading, something like this. Okay, lower volatility environments tend to favor less trends and more ranges. So I'm looking left. I'm trying to identify some really big support and resistance levels to buy low and sell high. So I'll be watching this one very closely. Again, New Zealand pairs, heavy news this week. Dollar CAD. I did take a short on the dollar CAD. Currently, price is currently trading around 33.17. I sold it around 33.13 last week. We have some really good disagreement that I noticed on the 4-hour chart. We're also on the right side of this trend line. Don't be surprised to see something like this. A little bit of a drift to the upside and then starts to fall back down into this area. I would say 3250, 3200. Ideally, something back around 3100. Sold it nice and high. I'm going to try to ride this down a little bit lower. But truthfully, if I have 50 to 100 pips this week on the dollar CAD, I'll probably take it. It's not a bad trade. We're looking to sell it nice and high. We did. So if we can get 50 to 100 pips with very little risk, then that's really the plan on this one for me, is just to make sure I have a chance to protect some profit. Dollar Swiss, a lot of range-bound trading. I still remain long on the dollar Swiss. So as the euro dollar is falling, the dollar Swiss is rallying. So I do have some decent positions in. I bought a little bit early, a little bit earlier, and then some lows. So I have 2 of my 3 positions in profit, but I'm not going to close this one out. I'm just going to let this one run a little bit longer. If it pulls back and heads up to previous support becoming resistance around 98.50, then I'll have some profit on everything. If it runs up to my actual target that I'm going after, which is 1.00, just shy of that, then I'll start taking some profit here on all of my positions. Otherwise, if it comes back down to lows again, that's fine. I'll just continue to hold it and wait to buy it at 95.50. So this one's more of a buy and hold. I want to see where price goes. Like I said, if euro dollar keeps dropping, dollar index keeps going up, then this dollar Swiss will likely continue to rally as well. So I suppose this one could be seen as a bit of a hedge against going with the dollar index as opposed to sometimes wanting to position against it. So I am long on New Zealand dollar. I am short on dollar CAD. I'm long Aussie dollar, but I'm also long on dollar Swiss. So even if I'm sitting in some drawdowns on some, this dollar Swiss or dollar index trade will pay me, and then eventually we'll get the bigger move to the downside. So anyway, I'm just holding long dollar Swiss. That's the summary there. Dollar yen, again, 110, 108, watching those big levels carefully. I know some traders in my room last week were talking about selling this near the top. We're at around 109.90, 109.95. Let me see if I can get a actual feed here. So last week's high 109.86. We had last week's high 109.99. So it's like right there at that 110 handle. And it's not down a ton. It's down 25, 30 pips from there. But if it can't break above 110, this is going to be a range-based trade towards 108.50 to 108.00. This might end up having some type of narrowed move as well. We might end up forming, more of a wedge over the next couple of weeks. I'm not entirely sure, but I would suspect that the bigger move coming is going to have to be above 110 or going to be below 108. Whenever these levels are breaking, I will be deploying systems to the downside, deploying systems to the upside, but otherwise I'm just waiting to get that confirmation first and not doing a lot of trading on yen pairs until that's pretty clear. Let's see here. Krone pairs, dollar peso and krone. Exotic pairs just kind of waiting, still in a channel on the peso. The dollar krone pushing back up towards new highs, just waiting patiently on this one. Euro krone trying to line up a really nice rising wedge. But this one, I think you saw this early in the year. I certainly did. This one also moves very closely to oil. So with a beautiful technical pattern, which is a rising wedge, this looks like a great short. However, oil is a big factor here. And oil sitting around 49.50. We are really, really flirting with a break lower than $50. And I think this is making some oil traders nervous. I think this might be making OPEC nervous. Because if we break firmly below $50 without much of an uptick, then this has room to slide all the way back down to these lows in 2018, which was around $43. So that puts a lot of pressure on the CAD. That puts a lot of pressure on commodities. It puts a lot of pressure on OPEC and Russia to agree to some type of emergency levels of production outcuts. Maybe it's half a million barrels a day or higher, maybe even 1 million barrels a day. We'll see what it's going to take number-wise to get this market to turn. This has been a really good support and resistance trade for quite a while. Lots of support, lots of support, lots of support. We are asking right now, are we going to see support here around this $49 to $50 level? So far, you can see that the bulls have really not been present. So we are, on the right-hand side of this trend line. Let's see what happens, right? I mean, if we break the trend line and we hold the trend line, then we're going back up. If we break the trend line and we drift a little bit lower, but we have divergence, we're probably going back up. So from a technical standpoint, I do see a nice reason for the bulls to come in this week and buy low. But again, fundamentally, you can see some really steep slides in oil, as we have seen since that high. I mean, isn't that crazy, right? I mean, how many reports did you see about oil going to $100 a barrel when we had the drone strike in Iraq and we killed an Iranian leader? And here we are from $65, and everyone's all nervous about this going to $100, and then here we are down at 50, and barely hanging on to that level. So watch your technicals, right? If we can't if the bulls don't show up this week and this starts drifting lower, 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 the next big level support is 43, and it can certainly get down there. So watch oil, watch commodities. This will put a lot of pressure on commodity-based pairs. If oil slides, expect the Aussie to struggle this week, the New Zealand to struggle this week. This may be risk off as well. We'll find out. I think that's why it's important that OPEC and Russia step up to the plate and vocally make it known that they're going to start doing production cuts so oil has a reason to bottom out and find some support. All right, so we've got coronavirus in the back burner as far as news. We have big news this week from Powell. Let's see what he says. Let's see if the market takes that as maybe a hint that the Fed's going to do some additional cutting or stay very accommodative. RBNZ rate decision, that'll be a big one to watch. Expect some decent movement on the Kiwi this week. I'm watching the dollar pairs. I'm watching, again, you're watching everything, right? I want to see what the stock market does. I'll be watching currency strength every single day. Look for my trendline video this week in the Keep It Seriously Simple video series on YouTube. That's really because it's simple. It's simple, it's technically friendly, and it works over and over again. So look for that video because we have a lot of great setups in the markets on a lot of instruments that are just, hey, look, if we break the trend line, what does price tend to do, on the right side of the trend line? What does price tend to do when we touch that trend line? Look and find out when I release that video this week. All right, so let's have a great week. I'll see you all in my trading room and classes. And if you have any questions, comments, leave them for me in Facebook, YouTube, Instagram, Twitter, whatever. You can find me out there. Here is my social media handles. Instagram at pulver.chris, Twitter at pulverchris, Facebook, YouTube, just type in my name. And have a great week, everybody. Talk to you soon. Bye.